Here's a shift point from bull to bear. It worked, right? Now, you're not going to believe me when I say this. I despise diagonal trend lines. I despise them. There's so much discretion involved. Should we have treated this like this? A little too zoomed out, in my opinion, right? There's rotations that we can see and little shifts that we can see. So it requires discretion to do that, right? Someone could have easily come in and said, hey, okay, swing high to swing high. That's what I see. Find that sweet spot between saying, um, here's the contextual order flow across these two little swings. And oh, look, the bulls took control right there. It's too micro. This is too macro. Something in between those two is the right view for how I like to do it. Let's go to another day. This is just today still, right? Oh, no. Oh, yeah. Today's the delta neutral. That's yesterday. So here's a real choppy, grindy, sideways day. How do I see it? I would say there's no counter rotations really here. I would kind of do something like this and say at a certain point there is a shift by the buyers around there, and there was really no other shift. Well, actually, there was right here. Curious if there was any follow through on that. No, there was not. It was into the close. Nothing happened. Little passive buyer. All right, rip roaring trend day post kind of election. Okay, this will be good. You know, it's a nice little sequence that kind of starts to fizzle out. It kind of goes sideways for a while, right? But in general, that's a shift for the Bears that they could not maintain the same essentially pace. Maybe the shift is somewhere in this region, right? So that may have prevented us, if we were just filtering by this only, from participating in the rest of this, what continued to be upward movement without any more net aggressive buying. So again, this is fantastic versus a cherry-picked example. Here's a case where we have a contextual order flow shift from bulls to bears that did not result in some beautiful downside movement that we can profit from. In fact, it will be a signal that you look at and use that says, okay, there's a contextual order flow shift for the bears. I've been waiting for that to take my shorts based on XYZ. We're going to put all that together, you know, as we progress, build you up in this course. And they're not going to work, right? Depends on how you're trading them, depends on your timing, your trade management, whether they work or not. But in this case, there wasn't general downward movement in price. It didn't work, guys. They don't all work. I just can't stress that enough. Beautiful. Love it. Wonderful. It's a tool that, as we've seen on the majority of days here, has been incredible for kind of reading contextual order flow. And here's a beautiful case of where it didn't really do anything to change the movement in price. All right, we got a lot of questions in here, so let's kind of, sorry I haven't been watching it. Let me hop into some of these questions. Lautaro. I don't know how to say it. Sorry. Great question though. Could we say that in Delta we also use the same things that we talked about yesterday? Compression, rhythm, patterns? And the answer is absolutely. That kind of lens for how to see price. I'm so glad you asked this. This is a benefit, and one of the reasons why I like to do these courses live is for this exact engagement. If I just would have recorded this and then put it out into the world, no one could have prompted me to clarify a little bit. Absolutely. The lens that we view momentum, angle of movement, rhythm and whatnot, it applies to the delta just like it does price, and then we get a relative sense of the two. Bayram asks, is it worthwhile to track delta rotations with zigzag and get a sense of normal rotation size? I'm not against it. Anything that you land on that you think could be helpful or help you see something that you want to see with that. I see no reason not to do that. It's not something that I've made a part of my study and what I've done, but it really does make sense to maybe do that and get an understanding. My question is just going to be how are you going to use it, right? Obviously, you probably thinking of using it in the same way that I taught rhythm yesterday and whatnot with price, getting a sense of what's normal, kind of that distribution. You can certainly do it. For some, the thing that I'm kind of getting a little hung up on is there's something in the back of my mind that says, and would make probably sense why I haven't done it, is that I'm just not sure how incredibly useful it will be. I think that price is kind of the primary, and delta is looking under the hood of price. So my focus is on the price rotations first and their rhythm and those kind of things. And then I'm getting a sense of the delta movement relative to it versus kind of honing in on, hey, what's the one standard deviation of moves of rhythm kind of moves in delta. But hey, it's something that you could discover and could become helpful and whatnot. I love this stuff. It's wonderful. Anonymous attendee. We shouldn't have any anonymous attendees here. I don't like to see that. This should be a very secure webinar where people couldn't register anonymously. Anyways, how do we reconcile a contextual bearish shift with us still being above delta neutral? What's more important? Great question from anonymous there. It's just like anything else we might read. You might have one thing that says this is bullish, and you might have one thing that says this is bearish. They might cancel each other out, right? It's in this exact case, what did we talk about was the F word for what was important with, okay, thanks guys. I didn't realize that you could just kind of submit it anonymously. What was that F word for an important factor in delta neutralizations? Freshness. So how I'm going to answer the question, and it was Alex who asked the question about this contextual, let's say, bearish shift in contextual order flow versus, hey, we had the delta neutralization. Let's draw this exact example for everyone and let's talk about it. Price, delta neutral. Delta neutral happens, and then here's the contextual shift. Everybody with me? There's delta neutral. We're bullish. We're above zero, so that's a bullish thing. And then we have the bearish delta neutralization. Why did I say delta neutralization? Bearish contextual order flow shift. And, let's just say prices, it doesn't really matter. Price is doing the same thing. And the answer is kind of, what does this mean? We have these two signals. Well, freshness has dissipated from the delta neutralization. So in my mind, scalping is short term, the more recent signal is going to carry a little bit more weight for me? It's a beautiful question, and everybody agrees it's a beautiful question. So I'm going to be more focused on this contextual shift than I am the fact that we are above 0. It's going to carry more weight. Great question. If we go back to contextual number 1, we're just on contextual number 2 here. We got a long ways to go. The main signal, the main focus of it are the actual delta neutralization events. Bullish above, bearish below carries a lot less weight in general. So this was an easy question to answer in my mind, because delta neutralization, the freshness was dissipated. A more interesting case study, and let me finish this thought, and being above delta neutral in general, being positive, is less important than a fresh contextual order flow shift. Let's look at a more complex situation where we have, let's just look at delta. Delta gives a fresh delta neutralization, and let's just say that there's a contextual order flow shift, but it's above delta neutral, and we're coming off of that fresh delta neutralization. That might be where I have to say they're equal, and it's canceled out. There's a really nice bullish shift going on here, and then there's a little bit more of a bearish contextual order flow shift that's occurring. They just kind of cancel out. Based on exactly how I drew this, I would lean a little bit more, I'm sorry to say, on the bullishness of the shift to delta neutral for the bulls, because the way that I drew this, it's a little bit of just kind of a flag, right? It's just kind of, there's not a real scary shift that's happening. We are still above delta neutral. Order flow's kind of gone a little sideways. So, the severity of the contextual order flow shift is a little weaker. It's still a thing, but I'd focus a touch more, just again, the exact way that I drew that initially, on the delta neutral. This is discretionary stuff, guys. Otherwise we would just hand you some algo to do all this. How do you treat, Julian says, how do you treat delta extreme readings that might signal exhaustion? We'll talk about that later. These shifts are the result due to the lack of efficiency. I don't know how to answer that. To me, it's more the result of this breathing that markets need and have to do. They don't move in a straight line, right? So the ebb and the flow, the energy coming in from a group of orders and people chasing momentum and stopping out, and then the opposite is the inventory shifts on a short-term basis. To me, that's, if I'm hearing you correctly, that's how I'd answer it. Recently, we have seen, Renee says, recently we've seen quite a lot of delta and price divergence. Delta might paint a clear picture, but price doesn't react accordingly. How to best navigate those periods, especially as a beginner? I don't have anything better for you, even as an advanced trader, to tell you how to avoid that or not allow that to cause losing trades or whatever. The fact is that there's no secret sauce. You can have delta neutralizations that don't work. You can have contextual order flow shifts like we talked about up here that don't change anything with the nature of price movement. There's nothing works all the time, so there's definitely going to be times where it just doesn't react the way we expect and whatnot for our frameworks that we're imposing on finding opportunities, and there's no way around that. Now, Can we improve our skills? Can we get better at reading things? Can we put more of it together to get a complete picture rather than just fixating on one single item? Yes, 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 yes. That's ultimately the answer, is to just get better at your skills. But you will never get good enough to avoid times where order flow simply misleads us, simply tells us that something bullish is happening and something bullish does not happen in price. Let's go all the way back to the beginning of some of our talks. Anything can happen and anything can change at any moment. Not to mention that markets can just get dull. You can have all this great movement and all these signals, and you get a signal, and let's say it's bearish and you're trying to take some shorts, and the market just flatlines. Whether that be because some news release, it's FOMC, it's coming out later, or it's just time of day where things flatline and nothing happens relative to what you kind of, your frameworks and scalping methodologies told you could happen or should happen. Again, Julian, we're going to talk about that coming later too. All right. Contextual 3, major absolute inflections. Maybe we should have hung on to Julian's last question there because this is going to get to it. Major absolute inflections. We almost we can be really quick through this section. One of them is kind of zero. It's a major absolute price level. In this case, it's a delta, value level. That's a big inflection. Where are we? Oh, look, bullish inflection from this absolute level of zero. As I walked you guys through before, my generic template is plus and minus 2,500, 5,000, and 10,000. That's really a great just kind of starting point. If we were to go look at crude oil right now, I'd probably put in a handful of numbers that are smaller, kind of in this range, because 10K these days used to be different, but 10K in crude oil is very rarely reached, so it's not that meaningful. Versus in something like the S&P, it's a fantastic inflection that we see a lot. In particular, so again, just to be clear, we have cumulative delta. Well, heck, that's theoretical enough. Let's look at the charts. I suppose NASDAQ can be another one where we're not getting to 10K a lot. And don't worry about that. We're going to cover that scenario in the future today. So as you can see, we have all these lines from our horizontal line study that we've added. There's 2,500, 5,000, 10,000, 0, obviously, minus 2,500, minus 5,000, minus 10,000. So we can look at how price moves relative to some of these inflections. Let's just make our delta chart huge here. And we can just scroll through and take a look at some of this. This is one of the more minor pieces. I'm just going to give you guys a sense of this movement relative to some of these. Lately in Q, delta has been quite small, not really getting to anything beyond just about 5,000, right? Took a dip below yesterday, briefly below 5,000 right here. But really, it's been all about 0, 2,500, and 5,000. So what can this do for us? Well, it's a read. I like to really think of these We're going to forget 0. We've already covered that as a very specific signal. We're going to focus on the other absolute levels. These absolute levels, these absolute inflection areas can and should be different in different markets. I give you kind of a basic template to put up. You can find some levels that make sense. So on a day like this, what does this tell us about the level of energy in this market? I would argue that on a market that stays essentially within 2,500 to minus 2,500, it's kind of low energy. You just don't have